perpetuated. Men in the West are taunted to renew their man card by eating meat because that's what real men do. That's the sexual politics of meat, and it reveals how unsettled masculinity really is. That's why after 9/11, that's why after 9/11, a focus on men as heroes and on meat eating became part of the reclamation of a wounded masculinity. When a black man was elected as U.S. president, we saw how white this wounded masculinity was. White supremacists weaponized it, eating meat, eggs, and dairy. Images of milk-drinking white men, of platters groaning with meat, and the baiting of liberal men as so-called soy boys are all part of the neo-Nazi messaging. Sexy cows, sexy pigs, sexy chickens, sexy fishes.
Can you guys imagine how fucking worse it would have been if Kamala Harris was elected the president of the United States? I just want to remind people. I know markets have been crazy. Friday was good. Today's starting off. It looks a little bit down. I just want to remind people how much worse everything could be. Absolutely everything. We do have some hopium for you today. It's not in metals. Precious metals. We got gold down 2%. We got silver. What is silver down? Let's see here. Silver's down 2.3. I told people yesterday. I got a lot of hate about this yesterday. I told people that that this is what a blow-off parabolic top looks like. If you own precious metals, I'm sorry, but it's just true. This thing needs to go up 63% more just to get to its previous high. And when I say this, guys, I just want to be clear here. Bitcoin, when it fell, yeah, it fell hard. That's true. But this is just a little over 3 weeks of time that you've seen a drop this steep, and that is not supposed to happen in the metals market. You're not supposed to see a drop that I want to say this actually within 2 weeks was 47%. That's not what you want to see in this world. So it's pretty clear. I've seen this with Bitcoin. I've seen this with meme coins. I've seen this with so many different things throughout time. It is not a good indication of the health of gold and silver as the next big play. Yeah, people calling for $20,000 gold. We'll talk about that a little bit too. I believe that puts the gold market cap around $123 trillion. So if you believe that's possible, then what you're saying is that you believe that gold will actually be larger than every stock market, every publicly traded company on the planet. Seems unrealistic. You'd also, let's assume that you think Bitcoin will still go down because you're Peter Schiff. That means that you're saying that Bitcoin should be worth 1/100th of gold when it was close to 1/12th not too long ago. So I'm going to say that that's probably not happening. I just want to be very, very clear. Let me real quickly. I did not pull my bookmarks up. I did get YouTube TV working for you guys last week. I wasn't able to quickly hop over to YouTube TV. I'm going to be able to do that this time. That is up and running. We're going to start with the U.S. economy like we normally do. But before we get to that, I do want to hop over here and look at some fear and greed. So I like CoinMarketCap. I actually like that better than alternative.me. As of late, you can see how, if we just zoom down here, you can see how we're in very, very, very oversold conditions when we go back all the way to 2020, mid-2023 on this one, so about 2.5 years. So that's giving you some indication of what Bitcoin is sitting at. Then we have the CNN Fear and Greed Index in fear territory right near the middle at 35. It's been in this range for a long time. And don't get me wrong, guys, the markets, I mean, they could go any number of ways right now. I do think this, though. I think there's a general trend. I think metals have peaked. I think Michael Howell has been a little right about liquidity pulling out of the market at the beginning of the year. He killed it in 2022, beginning of 2023, and he seems to be right thus far, so far. But so metals probably not doing well. Stocks, I don't know. It sounds like Russell's still doing good. We could look at some of those. Real quickly, we'll pull this up, and then we'll get into the news. I just want to give you guys the broader view. And if you guys have any questions in chat, throw them out. Good morning to Prosciutto and Time with a Y And Kirby, as always, here bright and early, man. I appreciate you. And P.S. Bailey from Texas. Good morning, sir. So if you look over here, you can see, again, we've had a multi-year breakout of the ISM or the Russell 2000. And this is a beautiful thing. It looks like it's ready to rock. I honestly think we're going at least to 2,900 here in the short term. The measured move for this kind of pseudo head and shoulders, it's hard to call this a head and shoulders when it's retraced so far down to here. But the measured move would get us all the way up into the 3,400 range. And that's bound to happen. I mean, if you look historically at the Russell, this is something where, I don't know, maybe it takes into 2028 for it to get up there. But it is bound to happen. And I think at the very least in the Russell over this next year or so, you will see probably a 12% increase. That's pretty much in line with the moves that we would see in this indice. Let's go over here. So again, the S&P though is seeing a little bit of resistance. I want to show this. Actually, we'll go to NASDAQ next. The NASDAQ has already rolled over, right? Or at least started a potential path of rolling over. And again, guys, this could be, who knows where this goes? We could consolidate right within this range. Maybe we get down to here. It's kind of like a bull flag, and then we go up and we start testing higher. There's a lot of people talking about volatility this year, though, and we have seen Six Sigma moves numerous times throughout multiple markets. So I would have to say people like Tom Lee and people calling for volatility could be right. And what I would caution you guys with in this kind of market is using lots of leverage, or really any, and trying to time it. It's just really painful. I've got hedges in place with TLT, and they're doing good finally. I don't know. I could be at $300,000 in TLT today, and I have, guys. I could have a $1.5 million position in that if the bond market, the 10-year, does what I think it's going to do. So that would be nice. It would offset any losses that I receive from a market getting ready to roll over. Oh, I didn't even talk about the S&P. Let me just go back over here. So again, what you can see here is that we got above the .618. We hit it. We hit it all the way back in October, end of October, and started to go above it, broke down. And again, this is the golden retracement zone. So if you're going to have a place where you retrace for a period of time, this is it. And this is after, guys, the S&P. You got to remember, we were telling people, hey, when we're down here, this is as good as it gets in April of 2025. This is where you buy, and it has went up a shit ton since then. And so this could be a place where we retrace and we pull down, where we still see the Russell doing well, but maybe the NASDAQ, the tech sector, still struggles, or maybe the tech sector picks up and now the S&P starts to roll over for fears of deflation. Because right now, as of today, we're sitting at 0.9% for the Trueflation indicator, which probably is getting a lot of people scared. It looks like we're also going to have Austin Goolsbee talking at 8:30 Eastern, 7:30 our time. So we'll get a Fed talking, and it looks like maybe a few others are going to be on the news as well. And again, we'll be able to look at those. I am going to jump back here real quick. I want to see if there's any new news from FS Insight. And again, if you guys have any questions at all, let me see. We got, I need to increase the size of that. My vision's not as good as it used to be. Aldo Loves said, if it wasn't for software stock performance, we would have been higher. Yeah, it's been absolutely crushed. And we know Jordy Visser and Kathy Wood have some different takes on that. Let's see here real quickly, though. So what's the last update that we have? We got the earnings report. Let's just look at this and see how this has been doing. So this is as of Tuesday, 6:30 a.m. I'm going to see if this will come up. 57 companies are reporting this week. 370 companies have already reported, 74% of the S&P. 76 are beating estimates with a median of 5%. That was like 81% at one point that we're beating. So that's fallen a little bit, but again, 3 out of 4 is not bad for beats, and a 5% number is a pretty good number. So this still looks good. Let's go back here real quick. And we do have a lot of news for you guys. I also want to point out, bottom right corner, I said this last week that this is where we kind of want to hold, and this is where we've been holding. We've been holding right at these peak volumes in Bitcoin, even though, again, Bitcoin's down 1%, silver's down 2.4, gold's down 2.13, platinum is even worse, copper's down today. All the metals are down, and yet Bitcoin is performing the best. I'm excited about that, guys. That's a nice change of pace, and it's something I like to see. Let's see. We got Sean Farrell. This was on Friday of last week, so they really haven't posted anything. Just talking about CPI-driven easing and rate expectations sparks crypto rebound, MNAV expansion, supporting that. And what he was talking about there is we're seeing MNAV expansion and MicroStrategy and a few others, which is good. You want to see that. Let's look over here at the economic calendar. Sorry. I've had this cough for 2 months. I don't know if you guys have the same thing. I live in the Midwest. For 2 months, I was just coughing. It's finally coming out, but it has been horrific to deal with. Absolute bullshit. Not a lot of fun at all. So Monday, again, we were closed in the States for the people that aren't familiar with this. We had Fed Bowman speaking. I guess that was it. Today, though, we have ADP employment change. That's probably going to be pretty interesting since people have a lot of concerns about jobs. So we need to keep an eye on that. That's at 7:15, coming out in about 30 minutes. We also have the New York Empire State Manufacturing Index. We want to see strength in manufacturing. So this would be something to keep an eye on at about 45 minutes. We've got the housing market index. That's probably going to be abysmal, even though, I got to say this, guys, I am getting a little excited. I talked about maybe bonds a little bit earlier. I do want to jump into that more, but I've been talking about this for a long time, how we're just grinding over here, rising, broadening wedge, looking very, very weak. If you're looking at like support bands, if you're looking at like the stuff that Cantonese Cat does, if you're looking at pretty much anything, this thing screams it wants to break down. Its next breakdown target is the 3.26 range. We're barely above 4%. If we see weakness in ADP employment, you're going to see this thing go even lower. The weaker things look from an employment standpoint, and the more it looks like the Fed has a legitimate reason to cut, the more you're going to see this thing drop. And I think that can continue to happen, even if we see. We got Jeremy Siegel coming on a little bit later too. I'll have to see what time that is. I love that guy. Even if we see GDP growth, if you're seeing slowing economic indicators, I think you're going to see the bonds continue to roll over. Hopefully not long COVID. I mean, who even cares about any of that? Is it the COVID or is it the shot that's making me sick? I don't fucking know anymore. Don't really care either. Those things have come and gone. But yeah, so I think, and I talked about this in a post earlier, I think TLT is going lower. I think we're going to get into the low threes. I think we can get into the twos this year, guys. And if that happens, I make a lot of money off my TLT position, and I will hop out of that and start nibbling it off and move into my favorite things, which again, Bitcoin is going to be right at the top of that list. AI, genomics, energy. There's so many other things. And even copper. I like copper. I think copper has a lot of utilization, arguable whether or not silver does. But I do think that copper, and I know Jordy Visser disagrees with that. He could be right. But I like what I'm seeing here. I really love the fact that we're seeing TLT drop. And we'll probably just keep heading down this vein of thought unless you guys have any questions. So the other thing I wanted to talk about is right here. It is TLT. Again, we're finally, guys, pushing up against this first trend line that started back in 2022. This is great. So we're pushing up against that. Then again, we have another one here, another one here, another one here. This is pretty much the breakout point. And if you zoom out even further, you can see how this is already a perfect example of a cycle going from cradle to grave. But and it falls roughly in the 110 zone for the TLT range in order for me to make that $1.5 million in that position. And then again, and that's such great security, guys. I could pull out like 80% of that and I could buy the dip and be better off for the market falling. This is why hedges are such a wonderful thing to have, and probably one of the only times in this kind of environment where you want to use a lot of option activity is going to be this. So I put TLT options are starting to act as a hedge in the current environment. Our theory was that once gold had run, this would be the case as long as people have faith in the U.S. being the cleanest shirt in the dirty laundry. Not that we're squeaky clean and everything is beautiful, but that we're the cleanest shirt in the dirty laundry. If you look at China outside of... So let me tell you about China, guys. So there is, every year, we have the Lunar New Year. It is a time where they take off a week plus to travel around the country, and the Chinese government uses this opportunity to pump markets. They print tons of money, and what they do is they start talking about, like, I don't know, all the AI models that are getting updated and how amazing they are and how they're so much better than the United States with less hardware. Or they start showing you kung fu robots that are kicking around that still don't have brains, but they've been programmed to do a little dance. And that's why you should invest in China. And that's pretty much where we are in the cycle right now with China. It is an utter fucking disaster. They have a housing market that has had the worst rout in history for their country that's been going on as far as negative pricing month over month for over 4 years now. We've been seeing this just massive drawdown, and it's not looking good. So I believe very strongly that our bond market can do a lot better because, again, gold and silver can't be a hedge if they've had a parabolic run and went up 500% in the last couple of years, depending upon which one you're looking at. They just can't be, right? That's why I'm liking right now for a hedge Bitcoin starter pack and mostly TLT, because TLT is in a route that's one of the worst routes that it's experienced since the early 1800s. So this is a hedge, what meant to be the hedge for the entire world, right? We're the world reserve currency. This is meant to be the hedge for the entire world. Everything, money rotates from market to market. Seems like this is the next one to pop. But the one that I think is consolidating and getting ready is Bitcoin. Jesse, History Guy Scalps. Chinese New Year through February 2023 will make gold quiet. I hold 5 to 10% as a hedge. Yeah, I know. I've heard all that from everybody. I hear so many metals people tell me about how everything's going to be fine in metals and how I don't know what I'm talking about and how it's going to go to $500 trillion market cap. But I just want to point out here that in gold, you have a rising wedge. Not a great sign at all. It's getting ready to break down from it. And I can show you video after video after video of the catastrophe going on in China with precious metals right now. And some of these precious metal shops are closing down because they're having issues now where a lot of people are trying to sell. Margins for them and profit making are very, very tight. Markets are chaotic. One wrong move of buying too much of something and not selling enough, and these companies are going out of business. So you got gold sellers and buyers in China that are going out of business right and left. China's paying a premium for this shit. Have you asked yourself why? And don't get me wrong, History Guy. I actually think that if China does continue its catastrophic failure, and it accelerates, or they try to go to war or something, you're going to see some interesting stuff happening with precious metals. But man, I think your opportunity to really get out of this at a good price and not be stuck and potentially range bound for years, if not decades, was here at the 5,500 range in gold. Because right now the measured move gets us back to test the low that we had here when gold plummeted just a shit ton in a week, from 5,500-ish all the way down to 44. And so we're set to test that again. Strong support as far as the volume, really around 4,200. I would assume that would hold. But if things really got dire and people really started to panic sell their metals position, you could see us go down to the 4,000 range, man. And for gold, going from 5,600 to 4,000 would be insanely painful. And again, here's what I want to talk about, guys. If you believe that the AI trade is real, if you believe that artificial intelligence is pushing us at an ever accelerating rate and that CapEx is going to continue to increase, and we're going to see strong amounts of that coming here in the months and quarters ahead and years. I mean, really, we got people saying that, really important people in the industry saying that the chip demand isn't disappearing for the next several years, right? It goes to 2027 and probably beyond. So if you believe in that trade and that AI is taking off, if you believe that what Tesla is doing is real with autonomy, if you believe that we could see massive GDP growth from all of the foreign direct investment coming into the United States of America, then precious metals are going to get utterly screwed. And again, what are you looking for in gold, guys? Are you looking for some kind of parabolic move in gold? Are you looking for that? Are you looking for, oh, wait, what was this? Is this not a fucking parabolic move? When gold goes from, well, and I won't even go back to 2015. Let's just do this more recently here. When gold goes in October of 2022, the bottom of the bear market, when gold goes up 244% over that time, or let's just keep it simple. Let's look at the breakout. Let's say when gold broke out in March of 2024, it has went up almost 200%, almost a 3x your money, 2.75x your money. If gold did that in what, a year and a half, isn't that a parabolic move for a market cap that's what, $33 trillion, $32 trillion today? Isn't that, do you really think it's going to 150 to 200 trillion or something? I just want to be clear. You just have to use math after a while, and history. I mean, you could use history too. Going back here, here's the dot-com bubble, guys. Then we did this. Pretty fucking great. Now we just did this. Pretty fucking great. What did gold do after it peaked in 2011? Because people finally gave up on the, oh, hey, the economy is going to fall apart again. That's how long it took, motherfuckers, from the dot-com bubble over here, right? Or I shouldn't even say that. Let's say the 2008 Great Financial Crisis. Over here, you could tell they were buying it from the dot-com all the way up to 2008. Then the 2008 Great Financial Crisis happened. Gold got all the way down to here. And then what happened from 2008 on, 2009, all the way to the end of 2011, almost 3 years, it took people to finally realize that gold wasn't the best bet and that what they probably should be doing is going long in the markets. And sure, you made 120%. But I tell you, if you bought Netflix or Amazon or Google at the bottom of 2008, you sure did a lot better than 170%. I see that same thing happening right now with gold. I see people that have gotten a lot of money. They feel really smart. I see the Luke Gromans talking about, the Ray Dalios talking about how China's going to replace the United States. I know when Ray Dalio became a communist, it was when China invested $5 billion in his Bridgewater Capital investments firm. But I don't know when Luke Groman became a communist, but he very much is excited about China, and his play is gold and precious metals and China replacing the United States. And don't get me wrong, guys, if you want to be a communist, you're probably watching the wrong channel, but communism does not work out well. History tells us this across every one of them. The only reason Russia ever did well was because they embraced capitalism and opened up to the West and tried to get us to invest there. And we did the same thing with China, and they did great too. And then fast forward to today, their economy's falling apart. And that all started when Xi started closing them off from the West, started closing down their educational centers to teach people English, started doing all these things to run away from the West and go to war with Taiwan. And it just hasn't turned out well. So I just want to reiterate that. We do have Jeremy Siegel talking right now, guys. It looks like on YouTube TV. I might actually just go back a hair because I love this man. I think he's a good person, and I want to hear what he has to say. So let's just see. 1 second. If you guys have questions, throw them out in chat. Thank you to the 334 people that are here. I do appreciate you. If you could hit the like, that would be wonderful. Let's get to it.
Join us now, Jeremy Siegel, Professor Emeritus of Finance at the Wharton School. What's on your mind lately, Professor? It started okay this year. We had a technical analyst on talking about how the AI trade and technology kind of treading water, but you're seeing some strength in the cyclical side of things, some rotation, which means if they can hold their own, I mean, we know how much they went up, the Mag 7 and AI. If there's just not a rout, maybe the market continues to advance with other parts of it chipping in.
Well, Joe, I still think the market does look good. At the beginning of the year, remember I said there's three speed bumps we have to get through. The first is the Fed chair. And we've got a great choice, Kevin Warsh. I think that's good. The second speed bump was the government showdown. Well,
Shutdown.
What would you say, about half solved?
Showdown.
It's a frequent flyer. A little bit worried about what's going to happen TSA when.
So to be clear, I think it's like 4% of the government that's shut down. It really sucks for the TSA. They've gotten absolutely screwed. So am I planning on buying a house? No, not remotely. And I'm so glad I didn't do it last year. That house that I was thinking about buying last year that I basically turned around and ran away from. I left those people with $10,000 of my money so that to not buy the house. And I'm so glad I didn't. They're selling it for less now. Interest rates have dropped. And who knows? I might be able to buy that same house for $250,000 cheaper than they were putting it up for. And maybe at an interest rate of 4% or even lower. So no, I have no intention in this kind of environment when the markets are bleeding. Again, software bleeding, AI stuff bleeding. Bitcoin's had a rough time. Tesla's still trying to break out of an almost 5-year trend. The only things that have really done well recently, and like the last, that have really done well in the last the 6 months are going to be metals. When you have this kind of environment, man, I am fully invested in investing, and I do not care about buying a house at all. I've lived in the house that I'm in for a very long time. I can stay here as long as I have to, man. I do not care. I'd rather have experiences anyway. Back to Jeremy.
Not in the next few weeks, but maybe in about a month. But one thing, the third one, and I don't think anyone has talked about it so far on the program today, the tariffs, the Supreme Court, I think, comes back Friday after their winter break. And I'm not saying they're going to have a ruling Friday, but I wouldn't be surprised if the ruling, came the very next week. And by the way, I think it's overdue. I think they should have. This was critical. They should have ruled on this earlier. So we have to get through that.
I do believe that them not ruling is a good sign, and I think the longer they put that off, the better. It could actually be into the middle of the year when we have a new Fed chair. And even if they do the ruling and they say that, hey, these tariffs are unconstitutional for whatever reason, there are other, again, statutes, I want to say it's a statute, that they can refer to in order to be able to, it's statute article something, that they can refer to in order to be able to continue the tariff regiments that they're doing. I don't think it really matters. Again, a lot of countries are still closing deals. China will replace the U.S. Elon says, hold my beer. Yeah, that's not happening anytime soon. Thank God for Elon Musk. If we didn't have him, that might be a true story.
And then I think the runway looks clear to me, but I think there's going to be a little.
So he's saying we got to get through the tariff shock stuff first. And I think right now Kalshi has 75% odds that the tariffs are repealed. And so it seems like this is probably more priced in than not. What happens if they don't get repealed? What happens if the Clarity Act passes soon? What happens when the 4%, 7%, whatever the number was in government, maybe you guys can grok it and find out what that number is. What happens when that reopens again? What happens if the Save America Act gets passed? We essentially have 50 people to vote on it. We have a simple majority. It looks like, from my understanding, that we can we can basically, you don't have to eliminate the zombie filibuster. That's where they don't have to talk. You don't have to eliminate that. It's procedural. So Thune can just do what he's supposed to do and and force them to talk. And Democrats would essentially have to just keep talking and talking and talking to avoid a vote with a simple majority in order to be able to pass that. That's my understanding of it. If I am wrong, throw something out in the chat. But I think we have a window, and I think there's enough Democrats too that realize that this is an 80-20 issue, and they're in states where maybe they're not impacted. It looks like we have Fetterman on board from Pennsylvania with the Save America Act too. I just think that this thing's going through no matter what. I think it's going through, and that would be positive too for the markets, I believe. Also, I don't know if you saw this over the weekend, but Mark Carney, of all people, indicated that he believes that regime change is needed in Iran. So again, we have that coming too. And yeah, big tax returns. I wanted to talk to that. I can't remember how much it was, But there's going to be a large amount of money coming in too from tax returns that people are getting back, and they're looking to invest or they're looking to spend. Either way, it's good for the economy and good for the stock market. We'll also look at some data points too that let you know that even if the Mag 7 aren't doing stock buybacks because they're pushing CapEx, that doesn't mean that the stock has to drop. And historically, it means they still go up, and they go up by an even larger percentage. So we'll look at some of that and talk to the logic behind it too. Will you be buying cybercabs to put to work? I don't think I'll be able to. I don't think he's going to sell it to me. I would love for that, but I don't think he's going to sell it to me. I think he's making it very clear that you can't buy FSD anymore, and that if I can't buy FSD for a cybercab, why would I own one? I think that it's going to be them that own them, and they're going to be deploying them everywhere. I don't think they're going to sell them to people. All right, let's keep going.
Digestion, because remember, the prediction markets are still saying that
I owe so much money. Paid out part of it, but I don't know, 400,000 something. I don't fucking know. I'm not completely done yet. Doing quarterly payments to try and keep things current, but so much money. When you make too much money, you owe too much money. It sucks.
The Supreme Court's not going to give a blanket approval to the Trump's tariffs, so there's going to be some reorganization there.
But yeah, after this year, I'll have paid over the last 3 years, which really timing-wise is like over a period of almost 2. I'll have paid $1 million in fucking taxes. So I would love, since I'm not the richest motherfucker in the world, for people to tell me why I don't pay enough. Please tell me why I don't pay enough taxes. Fucking please, because I pay a lot more than your average dude.
Especially
high school
yes, we are seeing that rotation. This is the biggest surge of value stocks relative to growth stocks that we've had in 4 years. We had a lot of head fakes last year, but this one looks real. We talk about how important AI is. We know about how much the Mag 7 is spending on building out AI, hundreds of billions of dollars. But guess that what the users are going to benefit all this. They can be using this at a very inexpensive price.
Yeah, that's a really good point that I don't think people are talking about. And that's why I think the small caps are doing so well too, even though people are talking about the death of software and all this other stuff, which there will be a lot of software that's cannibalized, guys. If you're not embracing AI over the short term, you're not integrating these things into your products, you will be fucked. But companies that have really strong data and where that data isn't easily, like, let's just put it this way, we are years and years away from AI just being able to be like hop in to some massive corporate structure and then just be like, oh, I know how to do everything. Let me optimize this. We'll fire some people over here. We'll do this over here. Adobe is probably dead. That's probably a good example, actually, of one that is dead. But a company like Palantir is not going anywhere. They're going to be so integrated with the federal government. They, again, do a lot of the things that somebody would want to have done. And yet you have to have obfuscation too, where you're not giving all the data to all the people all the time. So it's very like permission based, trying to aggregate all the data up, but then also kind of make it pseudo anonymous for the people that aren't supposed to have it. There's companies that are going to do well in software that are getting butchered. And then there's companies that aren't going to do that well in the long run. And I can see how the sector is getting revalued because of fears like that. But I do think some of these are going to come back really well. Palantir is going to be right on that list, along with a bunch of other companies. I think Zeta is going to be a good one too. That's that advertising company. I want to say they're like the 4th largest company as far as overall data sets. Like Amazon's bigger, Google's bigger. There's a few others maybe that have even larger data, but like these guys are right at the top of the list. They're integrating with OpenAI, and I just think that there's some opportunity there. Again, some are going to do better. Unrealized gains is insane. Oh, I know. Yeah, Netherlands. I don't even want to talk about 36% unrealized gain tax. That's the birth of capitalism, was that country 400 like something years ago. It's frightening, but I do want to say though, I think Jeremy Siegel's onto something here. There's going to be companies and individuals that are adopting these technologies, like I guess Claude bot, which is now OpenAI bot, but they're going to adopt these technologies and they're going to see massive productivity gains. We're seeing that everywhere, and that is such a beautiful thing. Again, we got data coming out, guys, in about 24 minutes. For ADP employment change, that should be a good one. Or I'm sorry, that one's coming out in 8, and then 24 for the New York Empire State Manufacturing Index. So we got some really good data points coming out here in a second. Let's finish listening to Jeremy.
Can increase their productivity such that we have not seen. I think you had the head of Cisco on earlier in your program, more powerful than the internet itself.
Yes, that's a big deal.
Your
and there aren't that many pets.coms, guys. I was here. I am old enough, being 48, I am old enough to remember what the .com bubble looked like. My dad was very interested in markets, and I got to watch that firsthand, and it was brutal. And it came because everybody had a .com. Every neighbor, we were working on one. My dad was working on one. Everybody was working on one. Everybody was investing in anything that said .com. And it was just that valuations were way higher than they are now for PE ratio and many other metrics, double plus. It was just a different world. We are nothing like that right now. We are in an exponential age. We're at the beginning of it. And the worst thing that's going on is there's a lot of CapEx from the biggest companies on the planet trying to spend over $500 billion this year growing that out. And that is just a world I'm excited to be a part of, one where I do not want to buy a house, and instead I want to be invested. And again, with the hedge, TLT is nice today. It's up 0.42%. It's up 0.55 on Friday. Did well last week. But again, this is one where I want to be thinking long term because the next couple of years are going to be absolutely transformational.
Take on the tariff issue is that it's just uncertainty. Either no matter what the Supreme Court does, it's uncertainty because there's a lot of anti-tariff types that think the market would embrace the Supreme Court not allowing a president, but they'll do something else, obviously.
Yeah.
So
yeah.
probably
to be frank, I'm not a big tariff fan. I think that I think there was. The Republicans passed, particularly with the Canadian tariffs. I would hope that what would happen, the Supreme Court said, we're going to give you 6 months to negotiate with the Republicans, or 3 months, the tariffs, what tariffs can be allowed. And my feeling is, since the impact of tariffs has been far less than expected, I think that a little jiggling, particularly some lowering in some key districts, those are the ones that the Republicans actually won on, Canada and something else, could get him congressional approval of those. But it's going to roil the waters, I think, for a little while in terms of understanding, how are we going to proceed on that? But I don't think, people talk about immediate refunds, or it's going to be illegal, and now all the supply channels are going to be disrupted. I don't think the Supreme Court wants this, and maybe that's one reason why they waited so long, is actually to figure out a way to smooth the transition towards getting some congressional approval to Trump's tariffs.
Jeremy, the CBO.
I actually don't love tariffs either, but I knew they weren't inflationary and that they were going to be an awesome tool for us to be able to reestablish trade relationships that are more flattering to our future and where we want to be. So flattering is probably not the best word, but so again, tariffs coming off for things that we need and that we don't want to see inflation on is probably a smart idea. And when I say that, when I talk about inflation, it's different. I'm talking about like base materials and resources, things that you don't want to have increased prices on. We're causing a slowdown, which again, you saw in the job market, firing a bunch of government employees. By the way, guys, has anybody noticed any problems with the federal government after firing 300,000 plus government employees? Have you guys had any issues with your life since they did that? Or is it pretty much business as usual? Because to me, that is just representative of the fact that we could do more. we could do more and get these people in the private sector. But again, I'm talking too much. We got a lot to go over. I'm going to try. Today might be a longer one. I want to hear Jameson Greer talk, and I've got a lot of things, a lot of different charts and things that I want to go over. So we're going to be pretty busy today. Pre-market's getting hit pretty decent. I'm actually happy about that. I would rather start off the week, especially last week being good. I don't mind at all starting off the week in the red and having the gaps above us. I want the daily gaps above us. This is a nice little way to start off the week, in my opinion, but everything's getting hit. Nobody's really excited. Again, Tesla's still at a 200 plus PE ratio. It's not exactly cheap, but it's a great company and going to be the biggest in the world. Even Dan Ives, I think, did an interview with Amit last week, I think it was, talking about that. And again, it's just how Tesla was the best company on earth, and I 100% agree with him. But anyway, we got about 2 minutes till we get our next economic data point, and then I'm going to switch to live here. I'm actually going to switch. Well, let's let Siegel finish off.
People think that.
Thank you to the 450 that are here. If you guys would be so nice as to hit the like button, it is greatly appreciated. Times have been tough for the likes and the views on YouTube because everybody's just been getting their ass kicked.
That their growth estimates are too low, but the CBO came out and said the legislation, the big beautiful bill, is going to widen the deficit, but it's going to be offset by the tariff revenue. So there's some positives in terms of getting debt to GDP down based on some of the proceeds from the tariff. So there could be some negatives.
There's no doubt. There's no doubt about that, and that it is. The tariffs are, tariffs are like a consumption tax. As I say, every other country in the world, a major country, has what we call value-added taxes.
Yep.
The United States is one of the very few that doesn't, and their value-added taxes do include tariffs.
Jeremy, if it wasn't regressive, the Democrats should love it. It's higher taxes. They love higher taxes. I don't get it. Because it's progressive, I guess, because it's progressive.
Because Trump initiated them.
Well, because it's Trump and because it's progressive. All right, we got to leave it there.
It's because
Professor,
it's Trump.
Thank you.
It's just because it's
Thank
Trump.
you, Joe.
All right.
See.
Love you, Jeremy Siegel. Let me real quickly. We're just going to go to live just in case we hear Jameson Greer here in a second. I'll keep an eye on that. For now, though, we'll jump over to the economic indicators. We have about 40 seconds until we get that latest data. Let me look at chat. Jacob23 says, Micro, what would be a possibly asymmetric way to short the euro long term? I don't know. I really don't pay attention to shorting the euro. I do think the euro is probably not going to do well, though. So that's an interesting take. But I haven't even thought about it. So I'd have to put some brain cells towards it. That isn't a play I've been focused on. My big one for the hedge is TLT. But I knew it was going to take a while to play out. I knew it wasn't going to be an easy one. I told people I was early on it because that's the way I tend to be. I tend to be optimistic and early. But again, I'd rather be an optimist and wrong than a pessimist and right. So that's the way I live my life. If I've learned anything from Elon Musk, but so I don't know. I couldn't tell you a good asymmetric way to short the euro. I'd have to think about it. Grok might be able to. Oh, we got Jameson Greer. I want to get this data point first, though. So let me just pause that with Jameson Greer, and then we'll go back and look at ADP to see how that's doing. And then we'll keep an eye on, too, FS Insight. Sometimes Tom Lee will put out research early in the morning, so we'll keep an eye on that to see if he's got that research out so we can see what it looks like. All right, still grinding, waiting for that ADP weekly employment change. This is going to be a beautiful thing. Jameson Greer, guys, I want to listen to him because he's one of my favorite people in this administration. This administration is such a good group of people, but he is right at the top of the list. 7:15, we're almost 7:16, guys. Where that ADP data at, yo? Good morning, all. Good morning, Ben Guy. Ben Guy, how long? Sorry, bad joke. I used to have a friend who we affectionately labeled Bend Over. Holy shit, 10.25K. That's good. It's better. It's a better number, guys. We got a really shitty number last time. Well, I shouldn't say shitty, but we got an okay number last time. And then we had, 2 weeks of just nothing, or 2 weeks of nothing. But now, 10,250, that is the highest number that we've seen since October of 2025. We'll take it. Let's look out over a longer trend here. If we have one, let me just see. I'm going to refresh real quick. I don't know why. I think I need to double check this. I know I pay for this. It's only, I'm going back 5 years, but we really only have, what year is this? Yeah, 2025. So it's not showing that. I don't know why. Anyway, but that's good. This is a good number. This isn't a bad number. We like what we're seeing. In about 12 minutes, we'll get that New York Empire State Manufacturing Index data too. We don't really care about the housing market unless it's positive. If this is positive, because again, we're starting to pull down yields a little bit better, cool. But otherwise, this is a good way to start off the day. Let's go back and listen to our boy, Jameson Greer, one of my favorite people in this administration of so many brilliant people. Midterms are actually really good for investing. Yes, you're probably pulling that from my friend Seth, aren't you? From my buddy Seth. My buddy Andre Stino Larson too. He had some good data out over the weekend. We might go over some of that. I really like that dude. There's a few guys on here that are just solid people, man. Seth is great. All right, let's listen. Oh, with volume.
It's good to see you, Mr. Ambassador.
Good to see you. Good morning.
The previous discussion, we were talking about the Supreme Court coming back on Friday. Do you, at this point, have any new visibility or color on what we should be expecting in the next couple of weeks on that big tariff issue that everyone's talking about?
Well, sometimes I get my foreign counterparts ask me, when's the case coming out? Do you know? Does the Supreme Court call you and tell you when it's coming out? Well, we really do have separation of powers, and we can never be sure.
No idea.
February 20th is their next designated date to hand down an opinion, so we'll see. We've heard comments from Supreme Court justices in recent weeks saying it takes time to write up answers. So we'll just see when it comes. If and when it comes and we win, then we'll just carry on our successful tariff and trade policy program. If it goes the other way, then we'll try to recreate that in the best way possible so we can have continuity in what the president's doing.
I saw the president wasn't very happy with those GOP members in Congress that voted on that tariff legislation. But did it raise the at least the notion that maybe there was some downside to certain ways that was conducted? Could it be modified at this point? Is there a way to do that, or are you in talks to do that?
Well, you have a handful of GOP members who either are losing their seats or are already in the doghouse, as you might say. Everyone else is aligned and moving forward. We've worked closely with Congress to keep them up to speed. A little bit of the untold story on the tariff program that people are really benefiting from is the open markets overseas. Last week we signed full trade agreements with Taiwan, and the days before that with Bangladesh and Guatemala. It's about 200 million people. We've restarted wheat shipments to Bangladesh. Hasn't happened since 2018.
You don't hear anything
first
about
time
that.
in 8 years. All these countries are bringing down their tariffs and trade barriers. Exports increased last year, and you're seeing inflation not only in check but actually going down.
And here's the thing. Outside of China and a couple of big players, these smaller ones are not going to fuck around with the United States if the tariffs get revoked. They're just not. And even China, I don't think, again, if we have other clauses that we can pull up, clauses, statutes, articles, whatever they are, if we have other ones that we can pull up in order to be able to recreate tariffs to kick the can down the road again, this is just going to be a non-issue. And I think that's the most likely scenario.
It's at 2.4%, much lower than the 3% we saw during the Biden years. So we're not looking at overhauls of this program, right? You might calibrate here and there, but it's been incredibly successful.
What about steel, and specifically steel and aluminum?
Well, MicroStrategy added 2,486 Bitcoin. That's a beautiful fucking number. Was that all STRC? One sec. I actually want to see this, guys. We'll go back to Greer. MSTR. Let's look here. Let's go to latest. Might have to I'll pull up my boy. We'll just pull up Sailor. Sometimes you just got to go Sailor. All right. Per Bitcoin, we hodl 717,000. That's just insane. Do we know what the breakdown was, though? Let me see if strategy gives us that. If you guys figure out the breakdown, let me know. I won't waste too much time on this. I am super curious to know, though, if they used STRC for all of that or if they issued any equity. Ron Rico says, do you believe hard assets are overpriced and smart person should be a net seller? It depends on what you're talking about for a hard asset. I believe that gold and silver and these others have had a parabola, and I won't go into it again, but we already looked at that. That's probably why silver is down. Look at this, guys. Look at silver down over 3% on the day today. People are realizing that they fucked up. Can you imagine? I got to say one thing, okay? I just want to be really clear, guys. Do not fucking chase in this market. This market is a destroyer of people who chase. If you are a high leverage, gambling motherfucker who loves to chase shit, you will get utterly destroyed. Can you imagine buying the top of silver? Can you imagine, guys? Imagine this. Imagine you got wrecked in any number of trades. Let's say you were in Bitcoin like I was in Q4 thinking that the 4-year cycle was going to play out perfectly, and you got wrecked on that after jumping into treasuries because you figured out what those were and you got excited about it and overzealous, and then you just got decimated, and then you saw everybody making money in metals, and every one of these stupid fucking Bitcoiners has all of a sudden turned into a gold and silver expert. Then you jumped into that because you saw that it went up in a month from $73 and it was $122 now for silver. And you're like, I better get in. And now you're sitting at $74 and you have experienced a precipitous drop after getting screwed on Bitcoin or any other number of things that you might have messed up on in the last part of the last year, down 40% from the top. So you chase this shit, then this starts falling apart. Then what do? You chase the next thing. You will get, chasing women is a different thing, JT, but it can also be very expensive. But if you're doing this, you will get utterly destroyed. Please to God, don't run from one thing to the next that's doing well, thinking that you've all of a sudden figured it out and that everything's going to be okay. You will wreck yourself chasing in this market. Do not chase. Research, figure out what you can buy and hold. Catching falling knives is bad for your health. It is if you have no fucking money. If you have no money and you don't know what you're invested in, then it's bad for your health. Just like chasing shit, thinking, oh, I've gotten screwed over here. Now I can go over to the other thing I don't know anything about, and I can chase it because my friend last week, or the guy in the Uber that I took, was telling me how he made so much money and how he's thinking about retiring off of gold. So now I should buy gold because the Uber guy thought it was a cool thing to do. I wouldn't recommend catching falling knives if you have no money and you don't know what you're buying, and I certainly wouldn't recommend chasing shit that you don't know because the Uber driver told you to. Again, just you gotta use common sense, guys, and figure out where we're headed. I just want to point to this again. I need to refresh this one more time. This is the Bitcoin hash rate chart. I don't know exactly where it's at right now. Can I shrink this bitch up? Let me see here. I don't even know. I'll have to see. Oh, I wish I could shrink this up better. Oh, I can. Let's see. 2 months, 3 months, 6, 1 year. Okay. So you can see how hash rate plummeted off the earth, but it's coming back. But again, this hash rate, guys, is about what it was in September of 2025. So anybody that was still expanding hash rate or just that kept mining Bitcoin like a CleanSpark, they're actually faring all right because if hash rate doesn't go up, difficulty doesn't go up. If difficulty doesn't go up, you still get the same amount of payout for your hardware and it's not really depreciating as badly. So for almost a half a year, CleanSpark is not seeing depreciation in what they're getting paid out for their Bitcoin. And that's over a period of time where Bitcoin is low and they're just stacking it up and continuing to add to the stack. On that note, real quickly here, Bitcoin treasury companies, CleanSpark actually overtook Strive as number 10 because of that stacking, which I love. And again, guys, the good companies are still stacking. Strategy just got more. Coinbase getting bigger. CleanSpark going up too. Strive just acquired Similar, and they got that extra Bitcoin on here. There are some that are selling. The BitDeers, the Exodus movement, some of these others, Congo, I think, sold recently. There's some that are selling and that are weak, and they're just paper handers and they're scared. But as a sector overall, I think we've got a lot of room to run. We do have about 2 minutes, till the next data point, the New York State Manufacturing Index. I'm going to jump back over to Greer, and we're going to let him finish it up. And I will try and get caught up in chat.
Oh, on steel, remember, we've shipped 300,000.
I like ASST. Dude, it fell so fucking far. And again, this is a company that has no debt. They're number 11 on the Bitcoin treasury list, which is really high up in that spot. And they want to become the next BlackRock of investing. And I like Matt Cole. I like the Vivek Ramaswamy helping originally create all this. I like the narratives behind it. I like the no debt. And I like the large Bitcoin holdings. And I like the fact that they have SATA, which is the kind of STRC. And wow, SATA's doing good. That's fascinating too. Look at that, guys. Look at SATA regaining its dominance here. It dropped all the way into the 80s as people had fear, but it's doing the same kind of thing that STRC is. It's coming back strong. I like ASST. Those I'm not going to say ass and titties, but this ticker has been kind to me. This is one, and again, we'll get to Greer. We might have to do that after the data point comes out. But this is one I love, guys, because I've made a lot of money off of this and called it really well. I made money over here on this thing going up a ton, or maybe it was right here. And then I sold it. Oh, no, it's right over here. I told people to buy over here. It was different because we didn't have the split. Then it went all the way up to here. This was the equivalent of $12 at the time. Now it's $250 because of the split, the reverse split. But I told people to sell up here, if you guys remember in chat. And then I started buying back down here, and then into here. And then I've been buying all the way down, especially as we started to just drop off a face of a cliff from 16 all the way to 7. So I'm loading up on this thing. And I've always told people this is not a short-term play for me. This is a long-term hold. This is one that I believe strongly in the future, or at least strong enough to be able to put 6+ figures towards. And I'm probably going to maybe sell a little bit more Cypher because I just have so much of that as my AI play. And I might buy more of this because it's just so undervalued. And again, no debt and a nice perp offering too with SATA. So I like it. I really like it. So I'm looking forward to this one, and I think it can do well. And it's nice to see it up 3% in pre-market. Again, I was stacking the whole way down, so that makes me happy. I kind of wish it would stay low, though, for a while. I'm not going to lie. I do wish that. Isn't ASST perfect for September and the end of the bear phase? Yes, that's another thing I should add is they actually have warrants that go that expire in around September to October. So that one is going to be more fun once those warrants expire. So because right now basically they had optional warrants where if it gets to a certain price, then there's a massive incentive for people to be able to sell these. And that way they can buy, the stock or invest in whatever they want. But once that expires in September, especially if Bitcoin or if Bitcoin does really well, we'll blow past that. Those people will liquidate their warrants, and all the people that were naysayers about ASST and Strive will all of a sudden that were shitting on Mike Alfred will shut the fuck up and nobody will listen to them anymore. I do believe this is a good one. Again, I don't have everything in it, but it's a good one. New York State Manufacturing Index. Consensus was 7, forecast was 3, previous was 7.7. We came in at 7.1, so we beat consensus and forecast. And this shows at the New York State Manufacturing Index that we are seeing over the last 5 years, we're starting to see life in the manufacturing sector again. If you go back here, guys, to July of 2025, or I should say June, look at this. Since June, only 2 months were negative, and they're less negative, and then we're seeing months in the positive. This is the first time, really the first time that we're seeing growth coming to the manufacturing index again since this thing shit the bed in January of 2022, 2023, 2024, or 4 years, and 2025, 4 years of just horrific price action and a reduction in our manufacturing in the United States as we became even more uncompetitive versus China. And we're finally coming back. You should be happy about that. This is good data. I don't care what the markets, I don't care what other people tell you. ADP employment change was great. And the New York State Manufacturing Index is telling us that America is fucking coming back. So this is a good thing. And it's nice to see TLT still doing all right, even with that move. It didn't really affect bonds. So I love that. I would love to see bonds go up or see yields coming down on bonds and TLT going up while our economy gains strength. I love that. Copper to gold, what are you talking about? Central said the copper to gold chart is a good indicator of manufacturing growth. I agree. I actually should save that chart. I don't know why I haven't done that yet. Maybe it's under my metals section. We'll check it. We do got to get back to Greer here in a second. But I do agree. Copper is a metal that actually gets used. It's going to be used for data centers massively. There's tons of copper that needs to be consumed from it. That will be a sign that we're seeing growth, not just in AI data centers, but in electricity too. Copper is great from those two standpoints. When you think about people robbing homes that are getting built, what are they stealing? They're stealing the fucking copper from the lines that people are installing for all the electrical. And then data centers require massive amounts of that. So what happens if the housing market starts to take off again while AI data centers start to take off and the manufacturing sector starts to take off? I think copper is the metal that does well. I strongly believe that. Again, guys, I'm loving what we're seeing so far today. Let's go back to Jameson Greer, then we'll get into the charts. It's going to be a long one, I think.
More, 300,000 metric ton, million.
Yeah, I think Shamath is right there. I like copper better than silver.
Metric tons more this year than we did the year before. We produced more than Japan.
To blow off.
There was some reporting over the week about adjustments there. I mean, you may want to sometimes adjust the way some of the tariffs are applied for compliance purposes. I'm not giving you double talk here. We've heard stories of companies that have had to hire extra people for compliance. We're not trying to have people do so much bean counting that they're not running their company correctly. The president's tariffs on steel and aluminum have been very successful, shipping more steel than ever, opening up new steel lines, new aluminum smelters announced. So clearly those are going the right direction. They're going to stay in place.
Jameson, on the front of the journal, and I think it cuts both ways, and that is that after holding the line for several months.
Real quickly, so Kirby says Visser is bearish on hyperscalers over the short term. So what you're talking about is everybody that's spending a bunch of CapEx on expansion in the AI sector. Because their earnings, basically, if they're spending all their money on CapEx, they've got less cash on hand. People are judging them based on that. Their valuations are going down. People are worried about whether or not there's going to be a payoff. Yeah, sure. I agree with all that. And I think that could drive down overall indices while energy picks up and while other things pick up. Again, Bitcoin picking up, TLT doing well. I agree with that. I think he's probably right. I think we could see the big guys. And again, the data points show that. We'll look at it a little bit. We're seeing equal weight index do really well, but we're seeing the S&P, the Magnificent Seven, all these big companies spending a bunch of money on CapEx not doing as well. I could see an Apple narrative coming where people are excited about all the Mac Minis that are getting bought up to be able to work with Claude Bot or OpenAI Bot. And then at the same time, they're not spending all that money on CapEx, so maybe companies or people reward them more. I could see all that.
Companies, big and small, now are beginning a new round of price increases that could be inflationary or could at least make it harder to bring inflation down even further. But then I agree with you. Some of these benefits that were behind the rationale for tariffs in the first place, opening up markets and onshoring and all the things that we're talking about, those probably haven't come to fruition completely yet. So on the one hand, you got tariffs will maybe kick in and price increases from tariffs will happen in some of the...
I think India and China are trying to wait out trade deals, hoping that this stuff fails.
Benefits of the new trade...
That the tariffs get ruled against in the Supreme Court. I think that strongly.
Policy won't be seen for quite a while either.
Well, I saw that article, and it's about the 75th article I've seen like that, right? I've seen people saying, well, the prices are about to go up. I mean, even if the tariffs affected prices in the way people say, which they don't, right? All the studies are overblown. But even if they did, it's usually a one-time price effect, not a sequential price effect over 14 months. I mean, it's just crazy. If you look at inflation, the actual inflation for manufactured goods, right, which is the bulk of what's being tariffed coming in, was only 1.1% over the past 12 months. So the idea that the tariffs are inflationary inflationary are totally belied by the data. And guess what? That's what happened during the first term too. When we put significant tariffs on China, inflation went down. So all of these studies, all of these things, they're just predictions. They have never come into effect.
He's almost done.
I also talked earlier about the CBO report that
CBO is the most worthless
the deficit from the big beautiful bill.
It's so biased.
Maybe the CBO is underestimating the growth potential of this economy, but for whatever reason, it said that the tariff income will definitely help ameliorate any of the deficit widening.
They believe there's going to be like no growth whatsoever. The CBO is such political bullshit. But whenever there's a Democrat in power, it gets better all of a sudden. It's just miraculous, really.
From some of the legislation. Go ahead.
Yeah, I was just going to say that's exactly right. I mean, this is real money coming in. The point of the tariffs is to reshore and protect domestic production, but all of that tariff revenue has a real effect. And I've had members of Congress who haven't historically been fans of tariffs come to me and say, maybe we can legislate this because that is actual funding that's going to come in to offset the deficit, like you're saying, Joe.
Well, and then I said, but I mean, you'd have every Democrat in Congress saying, wow, higher taxes, I love it, except it's a regressive tax. Is there any way that it can be where you could take that, that leg off of the stool and make it less regressive?
Well, first of all, I'm not sure where the Democrats are getting their data. In the first place, they've always been proponents of tariffs before Trump was in favor, right? You had Dick Gephardt in the 80s and 90s wanting to have tariffs in response to a deficit, which is what we're doing now. Second,
I don't think it's that, right? They used to get immigration too.
Yeah, exactly. Yeah, you're right. The Bernie Sanders immigration plan was always close the border. But the other piece to keep in mind too is it's not regressive. Most consumption in America is done by the wealthiest people. So the idea that it's somehow regressive is just wrong. And by the way,
perfect. A tax on wealthy people. They ought to get
they should love
unanimous approval in the Hakeem Jeffries house.
One would think, but again, these tariffs aren't making their way down to consumers anyway. They're making their way into intercompany transfers between Chinese companies and their U.S. Subsidiaries. I mean, that's where the tariffs are occurring.
All right, Ambassador Greer, thanks for your time this morning.
Thank you.
All right, I love that guy. He's so smart. I don't know. Tell me what you guys think in chat, but I love Greer. I'm going to zoom this up to the 100% mark. We're going to leave it there. We're going to get back over and we're going to start going through the economic data. John Nigerian says overall inflation under Biden, 4.3, Trump, 1.6, groceries, gas, and just doing a comparison here. So again, overall inflation, 4.3% under Biden, 1.6 under Trump, groceries, 3.8, 1.3 under Trump, and then gas, 24.4%, negative 5.4%. These are all very realistic numbers and things that you can probably see in your life. Katusa Research said it took 20 years for U.S. electricity prices to rise 68%. Then it took 5.5 years to add another 40%. Now add AI data centers, EVs, and grid built in 1985. This line probably won't flatten. We're going to do everything in our power to ensure that this thing flattens. I don't think they're taking into consideration the fact that Trump really wants to push, especially the biggest hyperscalers, to bid on these and basically account for the massive amount of data center demand that we're going to have for energy, and that they have to pay the cost of that. And so I think that we're going to see a lot of that, but we're going to see really strong growth. Here's the example I was talking about where it's like people are literally buying calls for $20,000 gold, and they think they're going to get there. This is so far out of the money. This is fucking insane. This is assuming a $125 trillion market cap in gold. I think that's utterly ridiculous. It's not going to turn out that way. Comfy posted, forward returns when buybacks drop are a tailwind to equity prices, believe it or not. It doesn't have to be that way, but again, this is showing that the next 1 quarter, next 2 quarters, the next 4 quarters, that after buyback drop year over year, so when they lower the number of buybacks, it's actually a higher return on the stock over Q1, Q2, and Q4 versus if they do the buyback. So there's a positive aspect of the buyback, but then it's even more positive historically when they stop the buybacks. And there could be a number of reasons why that's happening at a macro level too. But again, it's not all doom and gloom. Don't let people make you think that. Central said, any thoughts on deflation being a risk? Everybody is going to think that, right? I actually did a post about that like a week ago, talking about how I can totally see how all the people that were concerned about hyperinflation are now going to flip their storylines and they're going to be worried about deflation. And that could be the thing that drives markets lower over the next week, month, as people fear that deflation is going to be the big problem in our economy. I'm not worried about that. I think there's enough pro-growth policies and really smart things this administration is doing to offset that. And I think that the data that has been manipulated with the jobs openings through the Biden administration and into the beginning of the Trump administration, where these revisions are just getting bigger and bigger for the number of jobs that didn't get created. I think that was a nice cover for Trump, where again, first year you do all the pain, you fire all the government employees, over 300,000, and you have ramifications that trickle over into the private sector, both from that and from the tariffs. And so we were able to hide some of that pain thanks to the stuff that Biden was doing and that we just let continue to happen at the beginning of this year. And then you're going to start to see that those numbers get better and everybody gets excited about that. But we've had a silent recession for several years. The employment data was horrible. The real estate market has been frozen for 3.5 years. The manufacturing market has been dead for over 4. And again, you've seen multiple sectors of the economy. Commercial real estate was utterly crushed. And you're just going to start, and jobs were getting crushed. Everything was getting crushed. And now you're going to start to see that getting better. I did want to talk to this. Daniel Beza had a really good point here. He said, unpopular truth, the dollar stays dominant by getting weaker and undermines itself when it gets stronger. So it's the Plaza Accord actually weakened the dollar. The end of the Bretton Woods weakened the dollar. The stagflation weakened the dollar. 9/11 weakened the dollar. America First weakened the dollar. This is what's keeping people using it, because foreigners that hold our debts, if the dollar weakens, their debt becomes more sustainable, which is why foreign economies are doing really well. That also encourages them, and the spiral, I won't call it a debt spiral, but a bond spiral, it encourages them to want to buy more U.S. bonds, because again, it creates this recursive loop of hey, America's pretty great. Our debt's getting cheaper all the time. If the dollar weakens a little bit more, that sounds wonderful to me. And so I think you can see more and more of that over time. And again, here's another reflection of that. So the U.S. dollar continues to lead all global transactions. Kobayashi letter, the U.S. dollar's portion of international transactions via SWIFT is up to 50.5%, the highest since 2023, and one of the highest on record. So again, despite all the conversations about the dollar dying off and nobody using it anymore, we're seeing it gain strength. And to be clear, guys, I made a comment in my post talking about how, can you imagine what happens if Russia, oh, I lost that. Let me see here. See if I can find my place again. This is hard. I'm going to have to refresh. But if Russia, and they did have a memo indicating that they would, one of the negotiation techniques that they're thinking about is starting to use the U.S. dollar more for trade again and going back to the system, probably because they want their $300 billion back. But I could see that being a negotiating tactic, and I could see them getting on the U.S. dollar for trade too. And just imagine how much better this number gets. Somebody said that was fake news and that Russia denied it. Dude, it's literally in their high-level memo talking points for negotiation. So they might be denying it, but it is the path, one potential path forward. Central said 100% bonus depreciation permanent, restored and made permanent starting in 2025, allowing businesses to write off the entire cost of eligible assets, machinery, equipment, and vehicles. I know, that's pretty great, right? No tax on tips, no tax on Social Security, no tax on overtime. And again, talking about $2,000 checks for people probably around the middle of the year. All these things are really positive. And again, double the tax return that people are normally used to, and being able to change their withholdings to increase their paychecks. So you've got businesses firing off, foreign direct investment firing off. You've got this is the time for companies to spend money if they want to save a bunch of money. And we're talking about doing things in housing with Fannie Mae and Freddie Mac that could be very, very good as well. RHX said 78.5 million raised from STRC, 90 million raised from MSTR. Cool, man. So just think about that, guys. They just bought $178 million worth of Bitcoin from MicroStrategy, and they bought 2,486 BTC. Can somebody do the math real quick and tell me how many days of new supply that is that have been purchased just by Michael Saylor? This is just beautiful stuff. I love what we're seeing here. Jumping to China, Kyle Bass, my favorite China is bullshit fucking person. He's been spouting this for a long time, and he's very, very spot on. He says Ray Dalio, because there was this Ray Dalio push over the weekend, was mentally captured by the Chinese government, the CCP, when China's safe, state-owned currency administrator invested $5 billion in Ray Dalio's Bridgewater funds a few decades ago. And again, he's been investing heavily in China, so he's had a really big incentive for China to do well. And then he wrote this whole, we're in the fourth turning, China is going to take over the world and America's declining power. What he didn't realize, and what he still refuses to listen to today, is that China is the power that started to rise and is in decline, and the United States is the one that's going into resurgence. He didn't count on the fact that we could still survive. I don't know why people like Luke Roman and Ray Dalio literally would rather, they're pro-Chinese people that talk about how China is taking over the world. I don't know when they became fucking communists. Maybe for Ray Dalio, it was this $5 billion investment. I don't know about Luke Roman, but I don't listen to these fucking people anymore because they don't know what they're talking about. Let's look here, though. The base assertions are flawed, putting it nicely, talking about China. Productivity slump, what are they talking about? Last reported quarter, so this is for the United States. Last reported quarter for the U.S. productivity was an astonishing 4.9%. Output rose to 5.4%, whilst unit labor costs only rose by 0.5%. The 20-year average productivity gain year over year has increased by 1.55%. Productivity is up over 300% in recent release from BLS. He's 100% right. The United States is not the nation that's starting to go into decline right now. It is China. On that note, I want to listen to some hopium from my boy, David Schmacks, talking here about how great America is. Let's listen to that. Let's think about how great America is, not from a delusionary I don't care, I love America, and I'm not going to listen to the truth of what's happening around the world. This is actually why America is doing great. One of many reasons, like what Kyle Bass was just talking about. Let's listen.
I got to say, on all this economic data, that I think we're kind of missing the lead here, which is we are at the beginning of an economic boom. Again, we saw it in the GDP growth rates in Q3 and Q4 last year, over 4% Q3, over 5% Q4.
You want to be in the markets before we hit 6 or 7% growth GDP. When that happens, that's going to blow fucking minds. If we hit 7%, guys, 7% will be the highest number that we've seen in almost 50 fucking years. You want to be in the markets when that happens. Trust me.
Just had a January job report where the economy...
And you don't think Trump is going to, even if he had to falsify fucking records like every administration seems to do with economic data from the Fed, you don't think he's going to get us those numbers? You don't think he'd even, the Fed would he would push somebody to be able to make the numbers look better? All these administrations have done these kind of things. I'm not saying that's going to happen, and I don't even think that needs to happen. But what I'm saying is, even if you think Trump's a crook and you got TDS, you should realize it's an election year, and he's going to do everything in his power to make America look great.
Added 172,000 new private sector jobs. This blew away the expectation, which was around 70,000. At the same time, the government shed 42,000 jobs. The net of this was to bring the unemployment rate down to 4.3%. So I remember a few months ago, J-Cal, you were wringing your hands about the fact that the unemployment rate had ticked up. Well, now it's back down. And you're seeing a lot of jobs being created in construction, especially non-residential construction. Has to do with the data centers, the AI boom that's going on. 33,000 new construction jobs in January. You've seen in President Trump's second term, you've had 615,000 new private sector jobs have been created, while, again, like we talked about, over 300,000 government jobs have been cut, which increases the productivity of the economy, and it does what Secretary Besson says, which is reprivatize the economy. So I just think that the overall economic news is really good. Again, we have this AI boom going on. There's a new chart showing that the
Look at this, guys.
CapEx for this year that's expected just from the 4 leading hyperscalers is $600 billion, just from 4 companies. That's a roughly 2% tailwind to GDP growth right there.
2%.
That is just the CapEx.
2%.
That doesn't include all the ROI that you might get from that infrastructure on the software side, on the application side.
I just can't even. I got to stop right there. He's saying a 2% tailwind in GDP just from the CapEx expense not if it actually does anything to help anybody with anything that they're doing. So that's not an extra 2% from some business creating the first $1 billion company with like one dude and a couple of friends and a dog running AI agents on a bunch of Mac Minis. That's not that. It's just from the expense of CapEx. Imagine if we actually see productivity gains across all these little businesses in the economy where they are able to run leaner and meaner and better. And then unemployment not skyrocketing because we're still deporting motherfuckers. And then these boomers are dying off. And so you're seeing the unemployment rate not really going up because of the deportations and the people passing away. And so maybe jobs don't get incredibly strong. Maybe they look a little bit weaker. Maybe unemployment just tick up another 0.1 or something, or kind of flat where it's at. But if GDP growth and productivity and people are seeing gains from AI, it's all going up.
Productivity side. So we have a boom going on, and I feel like everyone's kind of blackpilling about this.
Yep.
They're focusing on this
I agree.
CBO report that
Which is
has
bullshit.
unrealistically low growth rates.
We're going to print 6%.
Right. Or they're doom scrolling about
I'm
Epstein
more
or
bullish.
what have
I think
you.
7 this year.
And I just think when we look back on this period, it could end up being a little bit like the late 90s. Remember when we had, we look back on the late 90s, we're like, wow, we had like phenomenal economic growth.
Golden age. Yeah.
Golden age, economic
Labor
boom.
participation.
Oh, guys, I wish I would have been an investor in the 90s. I really didn't get into the .com thing, and I was just such a young person back then. And I was just a kid when the .com phase really happened. I was in what was I? Let's see, 48 now, 20 something. Yeah, a long time ago. In my teens, actually, when that thing blew up. But it was, the 90s were such a great time to invest. Anybody who's older than me probably knows that. They know what a real bubble looks like. They know it. When you've seen the great financial crisis and what was happening in real estate in the markets, that's a bubble. When you see what was happening in the .com bubble, that's a bubble. And more recently here, again, there were some bubbles, the meme stocks, the Doge coins, all these, GameStop, all these things, you can see bubbles when they really form. What happened with metals recently? We were just not in a bubble in AI in any fucking way whatsoever, and definitely not for Bitcoin right now, and not for growth stocks. We're not in a bubble. They've been dialed back aggressively.
The internet,
Zero debt.
Too.
right? But
Zero
if you
debt.
remember what politics were
Sure, it
like
could take
at that
months.
time period, all anyone talked about was whether Bill Clinton got a blowjob from Lewinsky. So my point is just, again, I'm not sure.
No, it totally is. No, it is. We've already seen that. We've gotten a GDP report with the government closed down in Q4 that was 4.9%. It could have been in the 6s or 7s if we wouldn't have had a shutdown and things would have aligned a little bit better. So we're already at these numbers. You got to remember, we spent a year doing all the things that were required to build it up. When this happened during Ronald Reagan's presidency, when he followed Art Laffer and understood the concept of the Laffer curve, and he started lowering taxes and pushing pro-growth policies, of which I would argue are a fraction of what we're doing today for the last year, they started to come to fruition and start to show now, right now.
Sure, we're focused on the right
We do have Goolsby talking. We might listen to him on CNBC in a second.
things. I suspect we'll look back on this time period as the beginning of a new golden age.
Yes, I agree.
I think you're correct.
You have so many. You've got all the major CEOs of all these hyperscalers. You've got all the people providing services to them saying the same shit. You've got people like Chamath and David Sachs and even Jay Cow and these other guys talking about how we're at the precipice of a fucking golden age. These guys aren't a part of the administration. They're billionaires that have to think, do I need to be safe with my money? So that I don't blow it up, because again, they've got private sector investment money that is not necessarily liquid. If they need to be safe, they're going to talk about safety. They're talking about a golden age.
And just in terms of the hand wringing comment, anytime a statistic is 10, 15%, I highlight it. I wouldn't use hand wringing. I would just say, we generally look at that. When we went from 4.1%, which is where Trump inherited it, went up to 4.5, it's about a 10% increase in 1 year. If that trend were to continue, that would be notable. But to your point, it's gone down. And that is because the border, I believe, the southern border is closed. And as you're pointing out, we've got a lot of good news in the economy. So people are hiring still. And so we are in really good economic shape. I would
even J-Cow is saying that.
Say it's hard to deny that. Yeah.
All the job creation has been enjoyed by native-born Americans as well. Mm-hmm. All the job loss has been on non-native-born Americans.
And there's some people that show you different charts that say different things. Don't listen to those fucking people.
Which is pretty remarkable. So that, I think, is also going to accrue to the benefit of more Americans. By the way, just on the unemployment thing, there was a slight tick up in October because of the October 1 buyouts.
Yes.
Remember Doge created the buyout program?
Yes. And there were September or October? When did they hit?
It was October 1st was the deadline for that. And so we had a tick up in unemployment related to that. But remember, all of those were voluntary buyouts. They all chose the Doge option. That's what created the tick up in unemployment. But again, it was all, I think, a good and voluntary tick up. And now the unemployment rate has ticked down.
Yes, it's all great, guys. It's all great. J-Cal, Kalikinakis, the guy who was just talking, he calls himself like an independent. He's so not independent. He's such a liberal, but he's still gotten the fuck out of California, went to Texas, and he's growing more aligned with these guys, even though Daddy Trump won't allow him to go into the White House. He's really hoping, I think, that he can get there someday. But Galaxy said, Jesse, do you see a scenario where crypto starts pumping towards all-time highs sooner than people think? Yes, that's my base case. I hope that doesn't happen. Ideally, what I prefer would happen is, again, if we just zoom in over here, I would prefer that we actually get a deeper drop in Bitcoin and maybe even overshoot the 200. That's possible on the weekly. I don't think we go much lower than that, but I'm hoping that's what happens. I don't think we're going to, though. I think we're finding our base in the 68,000 range. I would love for that not to be true just so you guys know where my incentive is, I would love for that not to be true because I want to buy cheaper Bitcoin while TLT does well. So I would like to see more weakness in the economy. My fear is that doesn't happen and then my TLT hedge just starts to disappear. But I think what's most likely going to happen is TLT will continue to perform and do better because we will have growth-related fears, but then we'll also be seeing increased productivity, GDP numbers that are great. And again, if we get some of these tailwinds behind us, whether it's good or bad, we get the tariff decision behind us, we get the government reopen, we get the Save America Act signed, we get the Iran invasion behind us. That's probably happening in the next week or two. I think if you fast forward a month, the world's going to look a lot different, and a lot of the major scares that we have will be behind us. But I do think that if we go to war, a number of things, I think TLT could be a really good hedge. Real quickly, I'm going to see, I don't know if it's worth, Goolsby talked. I don't know if there's much to listen to there. I'm going to look over to FS Insight and see if we have any new analysis from our buddy Tom Lee real quick. It looks like we got Hadrika Singh and Kent Fung. State of capitalism with American characteristics keep failing no matter the party. I don't know. I'll read that one later. It doesn't look like a video. Let me keep going. Let's see here. We talked about Ray Dalio. We're going to skip that. China's GDP deflator. Look at this, guys. China is stuck in the longest deflationary streak in decades. This is what you do not want to have happen to your economy. And this is just straight up deflation. I think that they had deflation probably earlier than this in like early 2022, but this is long enough, right? This is almost 4 years of just deflation, losing percents per year. You do not want to have this happen. You don't want prices in your real estate to go down. You don't want prices. They have some of the worst things. Their costs for like the underlying, those things aren't deflating. It's their margins that are having to plummet because they're not able to sell things for as much because of all the tariff pressure and other problems going on with a general kind of slowing around the world of job activity. The rich haven't been slowing. The poor have been all around the world. And some economies are hit by that harder than others. Japan isn't doing that great either. I think they had 0.1% growth. So this is not what you want to see. China is fucking hurting very, very badly. Do not listen to people that are telling you any different. Also, I posted this to my subs last week on the 13th, but TLT is crushing it. What I'm trying to point out here is that with some of the hedges that I have, and again, I guess these only go to 2027. It's ARCG I have to 2028. in a 0.41% day, when TLT went up 0.41%, right now it's up 0.29. Again, it kind of pulled back a little bit because that manufacturing and ADP data looked great. But in that 0.41% day, some of these things went up 30%. That's amazing. I think it's probably more like a 15x the underlying. I think I can make $1.5 million if the economy gets weaker. So I'm prepared for weakness, kind of rooting for it. I'm rooting for more weakness before we see strength, and I really hope we get there. So that's where my bias is. Kirby Tax said, every time I listen to Invest Answers, I feel underallocated to Sol. I was adding last week for DFDV. That's kind of my big play on that one. I don't hate the financials for DFDV. It never broke above. Look at that. So let's just look at this. So there's this rule kind of with a descending triangle, which this thing very much turned into. I'm just going to draw some stuff real quick here so you guys can see the truth. And I'm worried that some of these hyperscalers, or not hyperscalers, but like companies like Cypher and others could be doing something similar to this. If it happens, whatever it is, what it is. But again, just the measured move, if you do it from the top, right up here, we'll do it from the top. But if you just say this, oh my God, look at how perfect that is. Look at how perfect that is. I did not do this beforehand, guys. I have not updated this chart, but like, look at this, right? This is exactly what we did, right? So I think we've had a really strong overshoot in Solana. I think Ethereum kind of looks that way too. Seeing heavy buys in Ethereum, guys. There is a daily gap that goes all the way down to here, though. So, I mean, if the world goes to shit, this thing could get even cheaper. But I do think that I think this is a great investment, in my opinion. I'm going to plan on adding more to it. And if for some reason the world goes to shit, this gets fucking destroyed, it drops another 60%, BMNR drops another 60%, something wild happens, I will take my TLT and I will cash out a shit ton of it, and I will buy the fuck out of that dip. Tom, Mark, and Sean, FS team, that's the Fun Strat guys, just for you guys who don't know, usually do not publish videos on weekends prior to week opening, so today will be quiet. And yeah, that's probably true. And I'll add this. Tom Lee has gotten a lot quieter. And I think he just got utterly humbled from his really outrageous calls for the beginning of this year for price action. And, you know, we all do it, right? I've been excited about things before, too. I will not shit on my buddy Tom Lee for that. But I do agree with it. One sec here. You're going to grab a little bit of water. All right, I can see people dropping off. Before you leave, please hit the like button. We're not getting as many views, and I want to spread the message because I think we're real close to fun times, and I want people to understand that. If you guys have charts you want to look at too, let me know. We can definitely do that. I'll look at the Cypher one here real quick too, because I want to tell you, I think this chart looks good. I think this is a falling wedge, but I just want to show you a different view too. Not that it's right. But let's say this isn't a falling wedge, just to play devil's advocate. Let's say that instead we're looking at this descending triangle. I'm not saying this is happening at all, but I just want to point out none of us truly knows what can happen. Maybe the tariff thing happens, right? And if that were to happen, maybe this turns into something really fucking ugly, where we see the AI space deflate a lot. I'm just saying, I'm not saying this is happening at all. I actually still think it's set up the other way, but I want to give you guys a view of just be prepared. Because look at this. Look at all the volume under here. In case we can't hold, even though this looks strong and the price action looks strong, we got earnings in 7 days. What if they suck? What if there's no deal signed? I'm just saying, okay? So this can go either way. I think it's probably going up, but it could go down. It could go down, right? So just like be smart and understand that. Palantir, yeah, we can look at Palantir. Palantir has been suffering. I don't think I've updated this chart in ages. Let me see here. Lots of gaps. Look at these little green gaps down here. Palantir is getting what should have happened to it, right? Palantir still has a forward PE, I want to say, in the 200s. Their PE is 202. So Would it be crazy for Palantir to go to $83 a share? I don't think so. I don't think it would be. I think actually what it would do is just a great breather from just really irrational exuberance, where it went from where I was around the $7 range talking about buying this thing to going up all the way to 210. And here's the thing, guys. If you went from $7 to 210 and you didn't take fucking profits, that's not my problem. Palantir, maybe Palantir grinds sideways for a year or two. It could. It could. And God forbid they miss earnings one fucking time. So I like Palantir. I think it's a great company. But if you didn't have the foresight to take any profits at $200 a share, and you're bitching about it being at $129 in pre-market, that is not Palantir's fucking fault. That is yours. So I think Palantir is sitting underneath this fib, and it looks like it wants to go down to the next level, which is 106. So I think people just need to be mentally prepared for more pain. I think that's the truth, honestly. I would like for that not to be true. I think a lot of people would like for that not to be true, but I think it could be true. Always look towards what is possible. Can you look at SUI? I don't even know if I have a good SUI chart. That one I might have to try and pull up separately. I just haven't looked at it in ages. Less views, bottoms in. I think it actually is a really good sign for Bitcoin. I think also, guys, Bitcoin is down 0.91% today on a day where gold, a huge market cap, is down 3.12 now. And silver is down 3.55, sitting at $73 and change, while gold is at $4,800 and change. So I got to say, Bitcoin holding up pretty good here. And it kind of makes sense now that all the Bitcoiners are gold and silver experts and telling you to buy those, that it would start doing better, right? Kind of makes sense. I will say this, looking at Mara is kind of interesting too. At least in regard to this, you got kind of this falling, broadening wedge, and it looks like it's finding support again, where it found it over here, where it kind of found it over here and over here and over here. So I don't know. I think the crypto space is starting to feel just a little bit nicer, a little bit cuter, for the first time in a long time. All right, let's keep going. PayPal. Is anybody talking about PayPal? Ugh. I haven't touched that fucking thing in like a year and a half, man, and I'm so happy. I think even my friends, Rory, when I quit, he's one of the friends of Amit and Tanner and those guys, and Future Invest, all those guys. He gave up on PayPal, I think. I think he finally gave up on PayPal. Lucas posted, Warsh, the next Fed chair, will inflate the debt away. He's in favor of yield curve control. That's true. I don't like this term, inflate the debt away. He is for yield curve control. It means pegging the U.S. short-term interest rates to an artificially low level. The Fed commits, and you can do that on the long end of the curve too, guys. I don't know that people understand this, but you can control the yield at multiple levels, long and short. He said this would be reminiscent of the World War II period. Back then, the U.S. debt to GDP was 125% versus 121 now. We talked about this the other day, but essentially we're set up very much for that time frame. And I do like that. I like being a part of that. Oh, I got to go back over here. Got to select my bookmark again. Almost done with the U.S. economy. We'll move to energy, AI, and all the other stuff. I have a few other things I wanted to show here. This put-to-call ratio is a good thing, right? We want to see this. Subaru trade total put-to-call ratio, that we were hitting a high level. That means everybody's afraid of drops. Wouldn't it be funny if we ended up going up instead? We see the same kind of thing on the tech sector, where the put-to-call ratio was really, really high. It wasn't as high as it was being represented in an image. We might talk about that in the beginning or in a little bit here. There's also the Hindenburg-Omen cluster, which shows this, right? It shows we hit this high level over here. Let me see. Yeah, right over here at 4. And again, you can see where we've hit this in the past, and we're hitting it a little more frequently. We hit it over here in 2024. We didn't even get to it in 2022, and we went down a lot then. But you can see where, again, during 2020, we'd hit some of this. This actually is kind of a contrarian indicator. If you look over here, we had Grok run it, and it said historical data on Hindenburg-Omen clusters 3.5 and 2 to 4 weeks showed mixed S&P outcomes. Per Carson Group's analysis, short-term volatility is common, but the index was higher 12 months later, 82% of the time. 82% of the time, you were higher 12 months later. So if anything, this is kind of a contrarian indicator that I would say that showing that we're probably more likely to do better in the future, not worse. Let's keep going here. So I was talking to Randy Kirk on here. I said, yes, but trucking is exploding higher. I've showed you guys data points last week. I think I have a few in here. Trucking at a national level, not at an international level where trucks are coming from, tanker ships that are bringing in goods. But nationally, like in the Rust Belt and the areas where I live, trucking is picking up and rates are getting crazy and people are having to reject loads because they just don't have enough people to do it. That is a good fucking thing. And then I said, plus real estate taking off with lower rates. Again, rates are coming down just like I said they were going to right in the springtime. We want to see that. And then manufacturing was getting built up from construction jobs. Soon, we're going to see those manufacturing jobs, and we're starting to. I'm not going to go into all of this, but this was a great video and interview with Delcy Rodriguez, the former vice president of Venezuela, talking about the relationship with the United States since. It was really good. These people are very much aligned with the incentives that we put in front of them. I think people have already memory hold this, but the fact that we took out Maduro in one fucking night says a lot about the U.S. military capabilities. And we discombobulated these Cuban motherfuckers that were trying to protect Maduro. And we did this in one of the most fortified places in the Western Hemisphere outside of the United States of America. It is the most fortified. And we were able to pick up that man and take him out overnight. And now we've got the vice president, who is the interim president of Venezuela, telling us that, hey, we're happy to work with you guys. Our incentives are very much aligned. We think Venezuela can really grow. This woman has an incentive to be a part of this process. And again, releasing political prisoners, just really great stuff. It was a wonderful interview. The energy secretary did an interview there too. Even though I disagree with him on solar and batteries, it was brilliant. It was a brilliant interview on his part. Goldman Sachs CEO, I put duh, David Solomon says Trump is going to take populist actions as we head to the midterm, which means he's going to try and stimulate the economy. Duh. So again, you're betting against that. You're betting against midterms actually being really good historically for data points. And again, the job numbers, this is what we've seen, guys. So everybody look at this, 2008, this is what we saw, right? This is 2007, this is 2008, this is 2009 and 10. We've seen more downside revisions and payrolls more recently here than we saw during those times. So we've seen a glut in employment. Here's that interview with Secretary Wright. Again, it was absolutely brilliant. I was so impressed with it. I expect very little out of that guy, but it was great. I'm not really doing shitcoins too much. I really don't care about them at all. I don't go really any lower than like Ethereum and Solana when it comes to the shitcoin market. I used to be more interested. I just do not care. So this is again, the Russian memo, guys, is considering moving back to the dollar as a part of wide-ranging economic partnership with Trump, per Bloomberg. This is from memos from the Russian government. That has been confirmed. The partnership would include U.S. and Russia working together on fossil fuels, joint investments in natural gas, offshore oil and critical raw material partnerships, windfalls for U.S. companies investing in Russia, Russia's return to the USD settlement system. If finalized, the deal would change the global economy. China right now is giving money to Ukraine, because of the war, trying to play down the middle. So they're funding Russia's enemy, and these guys are supposed to have, Russia and China are supposed to have this relationship that is unending and holds no bounds. And yet China's investing in Ukraine now, and Russia is talking about partnering with the United States. There's definitely some issues between those two countries, China and Russia. Let's keep going down here. Home ownership affordability. Trump reversed about 20% of Biden's home affordability crisis, but there's still miles to go. I agree with this. It just shows home ownership affordability from January 2021. 20% down payment, 30-year fixed mortgage rate to January 2025 to January 2026. We're making improvements here. We're getting better. We've still got a ways to go. We can help this a lot by lowering interest rates. That's a great starter pack. And then again, opening up the market will nationally pull prices down a little bit. And we want builders to build on the low income side of things because, again, that's where they need the most help. I want you to hear this, though. Again, I won't go too in depth on this, but we are looking at, and actually I probably won't play this, but we are looking at the greatest levels of deregulation in history in the United States, more so than happened at the time of Reagan. That's going to be a positive thing, too. You've even got Christine Lagarde, this cunt from the European Central Bank, talking about how it's better for Europeans to create incentives for investment in Europe than creating capital outflows by imposing taxes. How the fuck is that happening? You've got Kamala Harris, or I'm sorry, not Kamala Harris, but Hillary Clinton talking about how they overdid it on immigration. Just insane. You've got Barack Obama making fun of Gavin Newsom for the tent cities. You got these guys trying to moderate themselves. It's just absolutely fascinating starting to use Trump talking points like they came up with these things themselves. And yeah, so again, here's one of my points. It doesn't matter. Yields are dropping and inflation will continue to drop. Doomers, this is to somebody's questions earlier. I put this last week on the 13th, 4 or 5 days ago. Doomers will just flip from being scared about inflation to being scared about deflation. And I really don't care how long it takes them to catch up. My TLT hedge. This was in regard to a question that somebody said, market seems to give little fucks about the CPI. It actually did. We had a really great day. I wouldn't look towards short-term movements for anything ever in your decision-making. Absolutely unreal. Again, that 36% tax rate. We talked about this. Seth Golden, 100% of the time since 1942, buying the S&P on midterm election day. So that's going to be in November, generated a median return of 15.2%. So again, we could have some chop this year, guys, but if you bought on election day in November, you're doing really well historically. You're doing really well for that next year. So just remember that. And this is just 7 months forward, guys. Look at this. 7 months forward. Oh yeah, do you understand the difference between rate of inflation and total inflation over a period of time? Also, 90% of that was under Joe Biden. So this person put Bert Buffett decided to school me by letting me know that even though this inflation data looked good, it had went up a lot. So CPI food at home category, which is essentially groceries, is up by 30.8%. So again, understand the difference between rate of inflation and what it is. You can see here how, yes, we do have a little bit of an increase under Trump's term, but here's Joe Biden's term, guys. From here to here, 90% of this shit was under Joe Biden, not Donald Trump. Please understand that. And understand that the rate of inflation is getting better here. Not a fan of Christine Lagarde. No, not really. Not really a fan of anybody from the central bank at all. I put the crazy part is that on average, Canadians only have 60% of the household wealth of Americans. So this is the share of household debt to GDP. So somebody could say this and be like, oh, yeah, sure, Canada has the highest household debt to GDP number, but the U.S. is third, right? And China is only fourth. So China's doing really, really good. No, their household debt's doing good. Chinese are actually incredibly poor. And what I was saying over here is that Canadians only have 60% of the household wealth that Americans have. That is the highest figure out of any one of these countries. So all of these countries are significantly poorer than the households in the United States. And Canada and the UK actually have more household debt. So imagine their consumers and how fucked they are. China isn't even close to our wealth. It's nuts when you look at it. Let's keep going here. After record shorting, hedge funds bought the most tech stocks since 2021. So hedge funds are probably telling you that everything is falling apart while they're buying all the stock. Rapid Response 47 says a big step in the right direction, beat expectations, 8th month low. Again, even on CNN, they're starting to realize that consumers are paying less and they don't love it. We have this unprecedented disconnect between home sales and mortgage rates. Well, mortgage rates are going to come down dramatically. That's how we fix that, right? And then home sales will pick up, and that's how we're going to close this gap. Where home prices are going to drop a little bit, and then at the same time, and in some areas a lot, And then at the same time, we're going to see mortgage rates coming down dramatically because, again, the U.S. 10-year is seeing weakness. Maybe not as much today because the ADP was so strong and the New York Empire Manufacturing Index was so strong. But it is coming. Do you have an updated Tesla chart to share? Yeah, I do. It's just consolidating still. So if you guys look over here, we had the breakout, right? And then we couldn't do it and we came back down. Now we're hitting this fib level and kind of grinding. I don't know what Tesla does over the short term. It could be here for another 6 months, man. You got to realize this thing has a PE that's in the 200s too, right? Let's just look at something real quick here, guys. Just like Palantir, people could make the argument that Tesla is overvalued, especially if car sales are just kind of like meh, and they're retooling in their California factory to build Optimus. You could just see, and then people can say that Tesla, the Cybertruck, is a failure because it's still the best-selling EV truck on Earth, but it doesn't matter because it's not beating the F-150, right? And then you've got the incentives that have went away. There's a lot of bearish arguments you can make. It's got a PE ratio of 388, a forward of 200. It's technically more overvalued than Palantir right now. So I don't know what happens over the short term. I do believe this, though. I believe that by the end of the year, especially if America's economy has been taking off, we could see Tesla double. But what happens over the short term, I don't know. Bisser's really bullish on Brazil. I'm really bullish on South America and Central America. What did he give his main reasons for with Brazil? I mean, they're still kind of a communist weirdo state, but I do think that they're getting ready to flip conservative. Bolsonaro, his side of the coalition over there, kind of the conservatives, look like they're going to just destroy that election. And again, here's I won't play it because we've played so many audio already, but just Bessent talking about how real wage growth is going to continue to be very, very strong heading into 2026, which is wonderful. There's so many other things in here. I think we've killed this pretty good. We killed the economic part pretty good. Trying to see. Oh, here's my only worry, guys, for this S&P chart, is that you can look at this and see the resistance line and see that the S&P could still go to, by 2027, it could go to 8,500, or by the end of this year, it could go to 8,000 on the S&P, and I think that's probably going to happen. It doesn't have to be a straight path up, though, because if you look here, yes, it's been finding support on this upward sloping kind of, inverse head and shoulders. But this pattern where it's riding the support line straight up is more likely to break down and maybe test right down here than it is just to continue to go higher. So again, just be ready for some volatility, I think. Mel Madison is to Kirby. He's been on it since last May. Again, I think emerging markets are going to do well. We also know why they're going to do well, because their American-based debts are going to be a lot cheaper, right? We like the fact that the dollar is weakening for that one reason alone. I put Doomers went from buying gold and silver as a hedge to inflation to buying them today because of a fear of a slowdown, because inflation is showing that it's not a concern. Again, just funny, and now they're rolling over today and not doing so great. The exponential age, we're right at the beginning of it. I think we're done with the economic data. Let's move on. Let's go to Bitcoin. Market's about to open in 5 minutes. Boy, I've talked your ears off here without going over a lot of stuff. I want to show that my friend, the long investor, he is very liberal in nature, the opposite of me. He does believe that ETH is getting ready to have a parabola and that it's found strong support where it's at. I kind of agree with that, even though it could fall further and get back and test the 1600 range again. I do think that this thing could rip in the next year, and I think that 7,000 to 9,000 is not a crazy number at all. Bitcoin, again, whether you look at it the way I was showing it to you in the bottom right corner, showing that volume profile over the last 2.5 years and finding support on it and doing a lot better than gold and silver and platinum. You can also look at it this way, where you've got this downtrending line, and then you've got us having a wick down, finding support on it, and then looking to go higher. And again, maybe we even wick underneath of this as a short-term test, but I'm actually bullish on Bitcoin over the next year. And I showed you over here why. I'll just spell it out, but there's the volume, right? there's that downward trend line that we were able to perfectly bounce off of. It also matches up if you drew a line this way, it shows that we bounced off of it. And then you've got the 200 moving average here on the weekly time frame, which is usually a very strong support area if you're in a bull market. And then also you've got this 8+ year trend line that we've been able to hold. And then when you've got the DOC 618 golden retracement zone down here, there's just a ton of reasons why this should be the bottom area and we should find support on it. Could we overshoot it? Maybe. Here's another view of that. Again, here's the fourth halving that we experienced recently. Here's the third halving. This is probably like the second halving is somewhere over here. I don't have it displayed, but it is. But you can see how this has been a support zone on this trend line the entire time. We wicked underneath of it briefly for a pandemic, but we found support perfectly on it over here. My guess is even if we go lower, we're going to find support over here too. There's just so many coinciding variables. The support never looked this good here. It didn't look this good, honestly. It was here. Over here when we overshot, I mean, that was pretty scary. I'm not going to lie. The pandemic was a scary time to own Bitcoin. I knew it was going up, but when you saw it bleed as much as it did, it hurt. Kirby Tax, maybe pre-running coming capitalist regime. I don't know. Jordy Visser worked in Brazil a portion of his career. So he probably has really good insights into it. And again, I believe Central and South America are all turning conservative. They're all pushing towards America. The proximity alone, along with all the natural resources and the fact that these civilizations could really develop a lot. There's still a lot of impoverished people across Central and South America. They could get a lot richer than they have. I think that's going to be one of the great resurgences, along with India and then some other countries in Southeast Asia. So I think he's spot on there. John, could be weaker dollar and lots of minerals should help that trade. I was going to say the mineral trade is another one. I couldn't find my screenshot for it, but it's at record lows of ownership. Miners in the mineral space are at record lows of ownership. So again, something like COPEX, a fund that could do quite well if markets take off and we see a lot of growth, that just becomes more enticing to me, knowing that we went from like, I don't remember if it's the 70s and 80s, but being like 10% portfolio ownership and physical miners to 1% today speaks a lot, I think. Historically, buying Bitcoin at a negative 50% drawdown has 90% win rate over 1 year with an average return of 125%. So again, bet against Bitcoin at your own peril. Ethereum is seeing the highest level of staking. A huge portion of that is Bitminer. And again, the queue is very long for that, and they only have like 30% of their stuff in staking right now. Mike, does the Clarity Act passing and a new Fed chair getting into the role? Oh, it's going to be so positive. All that's going to be sick positive. My buddy Cantonese Cat showing Bitcoin where we're at now compared to what the Russell was at and saying, hey, we might have a similar pattern here. I agree with that. X is looking to launch Ethereum trading directly from the timeline. I love that. Goldman Sachs increasing their stake in their holdings for Bitminer by 585%, while Vanguard does 65%. I think all that's bullish. Again, we know he bought again. He said he can buy quicker than people can sell. All these different companies increasing holdings. The quintile regression showing. There's so many different charts like this, guys, that show that we're doing really well. The market is about to open. This is the time I bail. I do think I'm going to do that right now. I'm really hungry, actually, and getting a little foggy in the head and a little dizzy because I have not ate in a while. So I'm probably going to call it here. I do think I'm going to probably restructure. I've got a lot of Cypher right now. I'm going to lower my positioning a little bit in that, even though I think they could do good on their earnings, because there's some other stuff I want to put money into, like maybe ASST and a few, and like Enphase and a few others that I sold out of Enphase, up like 60, 70% over a short time. I want to add more to that. So I will let you guys know those trades when I do them. The market's open, and I wish you guys luck today. Again, I think it's good that we're starting off red and bouncing, or at least have potential to bounce. If we're going to have another volatile week, it's going to be this one. So just be ready for some drops and maybe start to thinking about adding, or again with me, TLT, up 0.2% on the day. I'm probably not going to add off of that today, but I probably will do some buying. Peace out, guys. I love you, and I will talk to you later, and I will see you guys online. Okay? Have a great Tuesday.